Good morning, good afternoon, good evening, wherever you may be in the world. My name is Hugh Morris. I'm a senior research partner here at CIM, and today we have a great session on digitalization of payment system in Mauritius and the opportunities for payment intermediaries. This is one of a series of FS Club webinar events to which we are delighted to invite you, and I'm very pleased to see we have a very active audience here today. So turning to the agenda, as you can see, we have a series of presentations from the Bank of Mauritius, from the FSC, from a number of practitioners, and that should give all of us an extremely good insight into Mauritius payments opportunities. And Mauritius is an exciting and growing international financial center in the Africa region. And what they have to share, I know, will be of wide interest. We also have an illustrious panel of speakers who will be sharing with us their thoughts from, as I say, the different institutions, Bank of Mauritius, FSC, and practitioners. So it is my great pleasure, before we go any further, to introduce Mardayah, Kona, Yerukunondu, who is first Deputy Governor of the Bank of Mauritius. Deputy Governor, over to you, sir.
Distinguished panel speakers and participants, a very good morning or afternoon, as the case may be, to you all. I would first of all wish to thank Zedian for having provided us with such an interactive platform. We will focus on the theme, Digitalization of Payment Systems in Mauritius and Opportunities for Payment Intermediaries. Our speakers will walk you through, and they will also answer any question which you may have. Ladies and gentlemen, Mauritius indeed has a track record of achievements. For the past 3 decades, all our stakeholders have put their heads together and worked relentlessly to make of Mauritius a jurisdiction of substance. As I speak, Mauritius is the only investment-grade IFC in Africa, and among the few countries in the world which are compliant or largely compliant with all the 40 recommendations of the FATF. The country has spared no efforts to develop its payment ecosystem. This has attracted business and investors alike to use Mauritius as a platform for payment intermediation activities globally. Mauritius has been among the first countries in sub-Saharan Africa to embark on a real-time gross payment and settlement system, the RTGS, back in 2000. It introduced the check truncation system in 2011, which allows checks to be cleared on the basis of scanned images. In August 2019, the Mauritius Central Automated Switch Instant Payment System, the MOCAS IPS, was launched. The MOCAS IPS is a 24/7 digital payment system that encourages cashless payment. It also supports a national card processing system and a government payment portal. The outcome is seamless interoperability across different payment channels, making it easier for businesses and consumers to engage in digital payments. In December 2022, the Bank of Mauritius launched a clearing center for payments in renminbi. This renminbi clearing center, the third of its type in Africa, will facilitate trade with China and eventually develop into a regional trading hub. The more so as Mauritius is the first African country to have signed the free trade agreement with China. In February this year, the country national payment switch was linked to the National Payments Corporation of India for the issuance and acquisition of RuPay cards in Mauritius. This linkage would provide a convenient and efficient payment solution for both individuals and businesses in Indian and Mauritian domestic currencies. It will thus reduce the need for international reserve currencies and help to boost trade and tourism between the two countries. It is noteworthy that India and Mauritius have signed the Comprehensive Economic and Partnership Agreement, the SECPA, in February 2021 to facilitate trade. Ladies and gentlemen, Mauritius is well connected to many countries in the region through its membership and access to regional blocs like the Southern African Development Community, known as the SADC, the Common Market for Eastern and Southern Africa, known as the COMESA, and the Indian Ocean Rim Association for Regional Cooperation. The Bank of Mauritius is a member of the SADC RTGS, an automated interbank system that settles payment obligations in real time between participant banks of the SADC region. The Bank of Mauritius is also the settlement bank for the COMESA Regional Payment and Settlement System, the REPS, which allows same-day transfer of funds. Payment intermediaries, which are regulated by the Financial Services Commission, are increasingly playing a pivotal role in facilitating seamless and secure digital transactions, mobile payments, contactless transactions, growing e-commerce are some of the activities going through the Mauritius digital ecosystem. Ladies and gentlemen, safety and efficiency of the Mauritius payment system is a priority, just as financial integrity, compliance with customer due diligence requirements, financial customer protection, and data protection. We remain determined to consolidate the position of Mauritius as an IFC of choice in the region. We will continue to innovate to cater for diverse needs of consumers and businesses, both local and foreign. Going forward, new business models are expected to thrive with higher efficiency, enhanced security and compliance, as well as improved customer experience. On this note, ladies and gentlemen, I hope you have an enriching session with our speakers. I thank you for your kind attention. Thank you once more.
Thank you very much. Thank you very much indeed, First Deputy Governor, for your illuminating keynote address and setting the scene for the rest of our session. Well, it's now my great pleasure to introduce Khemraj Hurry, who is Chief of Payment Systems and Digital Currency at the Bank of Mauritius. Khemraj, over to you.
Thank you. Good morning, good evening, and thank you for joining us today as we delve into the digitalization journey of the Mauritius payment systems. Over the past years, the Bank of Mauritius has spearheaded significant advancement that has not only reshaped our national payment landscape, but also positioned Mauritius as a regional leader in digital finance. In this presentation, we will explore the interconnected ecosystem that empowers the Mauritian payment system, from government bodies and financial institutions to the everyday users whose transactions shape our economy. We'll discuss the strategic infrastructure we have developed, such as the Mauritius Central Automated Switch, known as the MOCAS, which integrates both the instant payment system and the card payment system, enabling round-the-clock payments and seamless interoperability. As demonstrated in this diagram, it illustrates the interconnectedness of various components within the Mauritian payment system, from government entities, the central bank, to financial institutions and end users. It highlights the usage of standards like the ISO 8583 and ISO 20022 in enabling seamless communication and transaction processing. Overall, the diagram highlights the key components and interaction within the Mauritian payment system. It shows how the central bank plays a crucial role in overseeing the system, while various institutions and technologies enable efficient and secure payment transactions. Next slide, please. The Bank of Mauritius introduced the MOCAS switch in 2019. The MOCAS has been transformative for the national payment infrastructure. MOCAS serves as the central payment switch, incorporating both the instant payment system and the card payment system. It facilitates seamless payment routing among financial institutions, enhancing interoperability across banking, e-commerce, and mobile platforms. Operating 24/7, MoCAs allow residents to make payments at any time, bypassing the limitations of traditional banking hours. This instant payment functionality enables instant transfers between accounts across different banks. Alongside the IPS, MoCAs has introduced a standardized QR code payment solution, the MoCAs QR code, which has gained traction among both merchants and consumers. This interoperable QR code works across various banks and digital wallets, giving consumers the flexibility to choose their preferred payment provider. It is especially valuable for small businesses that may lack access to traditional card payment infrastructure, broadening access to digital payments and fostering greater financial inclusion. The QR code also supported the government's e-services initiatives and have been instrumental in digitalizing government payments. Next slide, please. Since its implementation in 2019, we have seen an exponential growth in the volume of instant payment transactions. This increase reflects a key trend driven by advancement in technology, changing consumer habits, the impact of COVID-19 pandemic, and strategic initiative by the Bank of Mauritius, such as removing participant fees for the use of the national switch, removing of fees for peer-to-peer fund transfer, setting a very low interchange fee for merchant payments, and even capping it at a very low value. These measures have democratized digital payments, making them more accessible, especially for small merchants who previously could not afford traditional card payment machines. Next slide, please. In this slide, we will talk about the cross-border payment system Mauritius is offering. On February 2024, we mark a historic milestone in the evolution of payments in Mauritius with the launch of a bilateral cross-border payment infrastructure between India and Mauritius. As part of this initiative, the bank introduced the MoCAs RuPay co-branded card, now designated as the domestic card in Mauritius. With the integration of MoCAs into the National Payment Corporation of India, payments through mobile applications and co-branded MoCAs cards issued in Mauritius are accepted in India. Likewise, Indians can use their mobile applications and RuPay cards in Mauritius. And it should be noted that the settlement is carried out in our domestic currencies, thus bypassing the need for third currencies. And Mauritius, like highlighted by the FDG in his opening speech, is a member of the SADC RTGS, which facilitates real-time settlement of interbank transactions within the region. Mauritius is the settlement bank for the COMESA payment system. It facilitates smoother financial transactions among COMESA member states, and it reduces the reliance on correspondent banks for cross-border transactions. Thus, it lowers the cost and transaction time. Next slide, please. The Bank of Mauritius has developed a robust regulatory framework to support the digital payment ecosystem. The introduction of the National Payment System Act has played a crucial role in promoting the adoption of digital payments by establishing a comprehensive regulatory structure. The NPS Act fosters innovation, security, and efficiency in the payment landscape while ensuring customer protection. We have a very clear licensing requirement, and entities seeking to operate as payment service providers must obtain license from the Bank of Mauritius, thus promoting accountability and compliance with the financial regulations. Next slide, please. In the pursuit of innovation, the Bank of Mauritius remains vigilant in upholding the security, integrity, and reliability of our payment system. Cybersecurity and consumer protection are paramount. Our systems are built on robust security protocols, and we enforce rigorous standards to ensure that all participants adhere to best practices. Next slide, please. Mauritius is at the forefront of digital innovation in finance. Reliable identification and secure authentication are essential for managing AML/CFT risk. To support this, the Bank of Mauritius has established a central KYC system that leverages an information sharing platform created by the government to streamline the KYC process and enable digital customer onboarding. This system operates based on consumer consent and upholds strict data privacy standards. The bank has also introduced a regulatory sandbox to foster experimentation in fintech, regtech, and other innovative financial services within a controlled environment. By providing a structured space for testing and refinement, the Bank of Mauritius encourages the development of new technologies while managing potential risk. And a major milestone in our digital journey was the official launch of the Bank of Mauritius Innovation Hub in September 2024. This initiative aims to foster the development of advanced solutions for the financial, banking, and regulatory sectors, both within Mauritius and across the region. The Innovation Hub is dedicated to driving innovation and accelerating the growth of Mauritius' fintech ecosystem. Additionally, the Bank of Mauritius is actively exploring the potential for a central bank digital currency. Next slide, please. As the Bank of Mauritius works to build a more interconnected and efficient payment ecosystem, we recognize that payment intermediaries have a crucial role to play in this transformation. The opportunities created by MOCAS and its associated services like IPS and the MOCAS QR code extend beyond just banks. Today, non-bank financial institutions, fintechs, and digital wallet providers have unprecedented access to a central, interoperable infrastructure that they can leverage to create new products and services. Payment intermediaries can introduce new financial solutions tailored to the needs of specific sectors and communities. With MOCAS as a backbone, intermediaries can focus on developing seamless user interfaces, innovative product offerings, personalized financial solutions, while relying on the secure and standardized infrastructure provided by the Bank of Mauritius. To conclude, the digitization of payments in Mauritius not only reflects a significant shift in consumer behavior, but also presents substantial opportunities for payment intermediaries by leveraging regulatory support and technological advancements. These intermediaries can play a crucial role in shaping the future of financial services in Mauritius. As the country moves towards becoming a cashless society, continued innovation and collaboration will be essential for maximizing the benefits of this transformation. So I will end here and thank you for your attention.
Thank you very much indeed, Khemraj. Now it is my absolute pleasure to introduce Aakash Mishra, Assistant Director at the FSC. Aakash, we look forward to your thoughts. Thank you.
Ash, you're on mute.
Thank you, Mr. Morris, for giving me this opportunity. Thank you, ZN, for inviting me to speak about the regulatory framework that exists for payment intermediary services. Well, in Mauritius, the fintech has been identified as one of the pillars of growth in the blueprint for the financial services sector. And modernization of legislation through publication of act, rules, licensing are all in pace to address the strategic objective, which is make fintech as one of the pillars of the blueprint. Legislations have been benchmarked as per international practices. I'm just giving a little background. while adopting a risk-based approach. As FDG also said about the FATF recommendations, recommendation 15, we brought our WITOS Act to be in compliance with recommendation 15, and FSC is leaving no stone unturned in terms of capacity building of its staff through study tours, webinars, and of course, through participation in seminars like this. Next slide, please. So the FSC is committed to foster a conducive regulatory environment that nurtures fintech innovation and business. FSC also ensures an appropriate level of compliance and consumer protection. While we monitor the conduct of business activity, we focus on AML CFT, which is one of the primary concerns in a PIS license. We look for corporate governance principles. We look for compliance with international standards and norms. FSC also recognizes the sheer importance of innovation and technology in enabling a wide range of financial services business models. In the same vein, the FSC plays a critically important role in providing clear regulatory policies and guidance for fintechs. Next slide, please. So on the payment intermediary services, back one, yes. The FSC oversees non-bank financial services as against Bank of Mauritius, which looks after all the banks and mainly the banks. All non-banking financial services are with us, and FSC is endowed, amongst others, to mandate, to license, regulate, monitor, and supervise PIS, those who conduct business exclusively outside Mauritius. So the FSC introduced the PIS license under the Financial Services Act. This license covers businesses involved in managing and processing payments between customers and merchants, such as e-wallets, online payment gateways, and similar financial intermediaries. And it's important to say that this license, PIS license, is mandated under Section 14 of the Financial Services Act. Next slide, please. Mauritius has been refining its regulatory framework to adapt to the growth of financial technology and digital payment services, including PIS. The PIS license allows entities to provide services such as transaction processing, digital wallet, fund transfer, and online payment gateways. It is designed to encourage innovation and competition in the financial service sector by allowing non-banking financial institutions to facilitate payments. Rule 3, Subpart 3 of the Financial Services Rules 2008 was amended to empower the Commission to grant PIS license only to those applicants proposing to conduct business exclusively outside Mauritius and which would not fall under the purview of the Bank of Mauritius. So there is a clear demarcation between the licensees. So this we have already covered. Can we go to the next slide? The licensing requirements. Since the topic is regulatory framework, I must touch a bit about the licensing requirements. The licensing requirements are under Section 72 of FSA. They need to be a global business company and have to come through a management company in such a manner as that may be approved by the Commission. Under Section 14 of the FSA, no person shall carry out or hold himself out as carrying out in Mauritius any financial services without a license. Obviously, you need a license to act as a PIS. The confirmation that the applicant will conduct PIS exclusively outside Mauritius, and the applicant has to maintain at all times its principal bank account in Mauritius. Next slide, please. These are some of the requirements, though most of the requirements hover around the basic requirements in an application, like a good business plan, a robust IT system, AML safety control, etc. But there are some items which are a bit specific to PIS, so I will touch on them. That they also need to have relevant approval or authorization in the jurisdictions that they intend to operate. We'll look at it. And the minimum capital is 2 million. They should have the PCI DSS certification that they comply with all the standard setting, and of course draft agreement with the merchant vendors, etc. Next slide, please. So they have to comply with the National Code of Corporate Governance in Mauritius in terms of having resident directors, registered office address, and it has also to show us how it will comply with section 71(3) of the FSA, which is more to do with substance requirements. So minimum spending has to happen in Mauritius in terms of infrastructure, in terms of resources, etc. Next slide, please. The completeness of application has to be on FSC1 platform. As I said earlier, business plan, fees has to be paid, ongoing obligations to be fulfilled by a holder of a PIS license, submission of audited financial statements, any other requirement that FSC may ask on assessment of the business plan. Next slide, please. Can we move to the next slide? Yes. The FSC recommends that when submitting an application, an applicant should be conversant with the relevant provisions of the law, guidelines, and circulars which the Commission has issued from time to time. And in an attempt to increase the competitiveness of the MIFC, it was announced in the National Budget 24-25 that any application which is complete in all respect, which is submitted, will be granted a license within 10 working days. To this effect, we have amended section 17B, and it has been introduced in the Financial Services Act, so which is a part of the law about the turnaround time to process an application. We are trying to be more competitive, and of course there is a small caveat that the application has to be complete in all respects. There are licensing criteria put on our website. Applicants are encouraged to look at it and make sure that the application they submit, all requirements are complete. Next slide, please. On supervision of PIS quickly, we have currently 33 licensees of PIS, and in terms of supervision, we do our daily bread and butter activity on them. We do prudential on-sites, we do AML on-sites, we do off-site reviews. So mainly on PIS, there's a lot of focus on KYC and ownership, beneficial ownership, KYC requirements. They are expected to have robust customer protection policies, including secure transaction processing, transparency in fees and dispute resolution. Data protection is very crucial to them, and we ensure we check what are the agreements they have with the merchant vendors or the other intermediaries through which they interact, so that we make sure that strict data management and security protocols are in place. Next slide, please. Yes, on the on-site monitoring, we go to the premises of the licensee to carry out inspection and look at its book and records. We cover AML CFT, but we also go there to do a market conduct or a whistleblowing act. Supposing it comes to our knowledge, we visit them. We check that whether they are complying with relevant laws and regulations. They have a good corporate governance. they are adhering to all AML laws, and we also see how they're dealing with policyholders are fair and transparent. Next slide, please. Next slide. Yeah. And we, in terms of offsite monitoring, we do the regular review of their books, their TRC application, the regular change of auditors or change in directors, shareholders, owners, etc. This is again a bread and butter activity, and we carry out in a routine manner for all these licenses. They request us for good standing. Sometimes there is winding up. There is late pay, late submission of accounts. We have to send administrative penalty to them, etc., etc. Next slide, please. On the enforcement actions, FSC does take enforcement action whenever there is breach of law. In fact, for one of the PIS licenses, we had to revoke the license, but FSC is not a very, I would say, trigger happy regulator that we are there to revoke the licenses of for any small breach. We give ample opportunity to licensees. It comes to us, the breaches, we send it to our enforcement directorate. Many times enforcement directorate sends it back to us that, well, they have complied with the breaches and there are no more breaches, you can take it under supervision itself. Sometimes when the breaches are too huge, these are sent to enforcement committee. Through enforcement committee, sometimes, of course, penalties are levied, or maximum is the revocation of license. Even then, they have an opportunity to approach the financial services review panel. So all regulatory, I would say, sequences are followed, in the sense, right from authorization, we handhold them. In supervision also we support. And if at all there is a repeat offense, and despite our AML visit and our issuing of deficiency letters which find them non-complying or showing no intention to comply, we definitely refer them to enforcement. So that's how we are currently regulating and supervising the PIS. Next slide, please. Way forward. On the way forward, we know that there has to be a balance between innovation and regulation. So many times we find that innovation sometimes overtakes regulations, but then it is our duty to foster innovation. So we have a regulatory sandbox licensing framework where innovative companies can experiment and within a controlled environment launch their product. We definitely are looking at other jurisdictions and what they are doing. We are also wanting to not be left behind. So it's about regulatory sandbox and the need to strike the balance between innovation and maintaining financial stability. Next slide, please. This is our own internal, I would say, strategy in terms of how we at FSC are gearing up to meet the challenges. So there is a lot of emphasis on capacity building. We are looking at new regulations which are coming up in other jurisdictions, and also we are looking at existing regulations where we need to tweak them to favor the innovative ideas, and making it more, everything should be available on the website, that a licensee and applicant doesn't need to come to and fro with questions. It should be all clear. And we of course look forward to participate in ISCO, GFIN, other fintech working groups so that we learn more and implement it in our jurisdiction. Next slide, please. So the latest news is of course not a secret to anyone. In the newly released GFCI 36, Mauritius has made remarkable progress in the fintech sector as evidenced by its rise to 75th position in the fintech index, climbing 12 places since GFCI 35, which was in March 24. I thank you, and FSC will continue to drive innovation, usher in new products backed by a solid regulatory and supervisory framework. That's all from me. Thank you so much for the opportunity.
Thank you very much, Aakash. And that concludes the illuminating discussion and thoughts being shared by the FSC and the Bank of Mauritius. Pardon me. Now my pleasure to turn to a series of illustrious speakers who are practitioners who can share their experience. And first is Kresh Goomany, who's Group Chief Executive of Emtel. Kresh, my pleasure to hand over to you.
Thank you. Thank you. Good morning, good afternoon, good evening, wherever you are. I'll cover a couple of slides to give you an indication of who we are, what we've done, and what are the key to successful digital payments in Mauritius. So if we can move to the next slide, please. Next one, in the interest of time. Another one. Okay, so Blink is basically a mobile payment app. We are licensed under the PSP license from the Bank of Mauritius. And it's basically a mobile payment app that allows anyone using a smartphone, obviously using mobile data or Wi-Fi, having a Mauritian rupee bank account in any of the 11 banks in Mauritius to connect all their bank accounts on a single app. So it's basically a single app that can link all your bank accounts rather than having different apps from different banks. Well, it's basically a free payment app for all the banks in Mauritius, free of cost. Anyone having a bank account in any bank or any combination of banks downloads Blink, obviously uploads the KYC, links the bank accounts, and is ready to transact. And when they transact, they can pay to billers. We currently have more than 20 billers on our platform. They can scan and pay at merchants. We have more than 7,000 merchants. They can scan static QR codes, dynamic QR codes. They can use their Blink on e-commerce platforms as well as payment links. They can do P2P payments, whether paid to bank accounts, paid to mobile customers having Blink as a payment app. They can also do self-payment if they want to transfer money from one bank account to another bank account in the same bank or in different banks. They can also schedule payments. So we're basically providing instant digital payment access to all the smartphone users in Mauritius who have a bank account in any of the banks in Mauritius. And this has been made possible by the advent of the national payment switch by the Bank of Mauritius, which Khemraj described earlier. The mobile payments transactions in Mauritius has consistently been growing year on year. In fact, if we compare it to cards payment, it's grown by 50% year on year compared to only around 9% for card payments. And we at Blink, we started operations in 2022. Obviously, we did 0 rupees in terms of value of payments then. We are now doing more than 700 million rupees worth of transactions in a month, and we aspire to do 1 billion rupees worth of transactions towards the end of the year. Blink provide convenience to customers because they can pay at their convenience anytime, anywhere in the islands of Mauritius, even when abroad. Now, Blink also gives that feature to its customers, to use the Blink app in India, through the possibility of enabling UPI transactions between the Bank of Mauritius, the government of Mauritius, the Reserve Bank of India, and the government of India. Next slide, please. So as I said earlier, Blink is the only PSP provider in Mauritius that allows its users to use the Blink app in India. So basically, if you go to India, you don't necessarily have to carry cash with you or convert Mauritian rupees into dollars and dollars into Indian rupees and use for your payments in India. So everywhere where there is what we call a UPI enabled QR code in India, you can scan and pay just like Indians do in India. But you can scan and pay using your Blink app, and the money is deducted in your Mauritian bank account in Mauritius. In the same manner, Indians coming to Mauritius can scan and pay special UPI codes in Mauritius, MOCAS UPI codes, MOCAS enabled UPI codes, and the money that they pay is deducted from their bank account in India. So basically, you can use Blink in Mauritius, but also use Blink and scan QR codes in India. If we go to the next slide, I've just tried to demonstrate what are the key success factors to enable digital payments in Mauritius. One obviously is adoption. And adoption can only happen when the system is open, within commas. You need to have an open system because an open system opens doors to limitless opportunities. You need to have obviously robust technology platforms, scalable platforms, and stable platforms that can sustain the different number of transactions and the volume of transactions that are happening on the app. Obviously, again, as mentioned earlier by Khemraj, make sure that you are adhering to the cybersecurity requirements because this is payments. You are linking an app to your bank account. You want to make sure that nobody can use your bank account other than you. And yes, we need to learn from the best in the market. And the best in the market in terms of mobile payments are India and Africa. We have a long way to go, but we will certainly reach there as long as the enabling factors are in place. And in my opinion, enabling factors englobe a good regulatory framework, which is very important, but one must not make the mistake of confronting a good regulatory framework to an over-regulation, because over-regulation is never good. We need to have facilitators from authorities to encourage people to use digital payments as opposed to cash payments. The other thing is we should not limit mobile payment apps just to enable payments. They can evolve into a number of things. We talk a lot about super apps, so do more than payment apps, but also why not open or enable the relevant banking services on any fintech app. We should not limit the banking services only to bank apps. We should allow customers using any fintech app connected to the national payment switch under the PSP license, in our case, to be able to check bank balances, to be able to check transactions, to be able to make payments to credit cards, giving the customer the possibility to do seamless transactions on his or her bank account from any fintech app under a PSP license in Mauritius. Because fintech providers have proven to be more agile, more innovative than traditional banks. So we need to have open systems to allow them to develop and provide customers conveniences for payments and in their payment journey, more than payments, including remittances, access to loans, insurances, and the possibilities are enormous. And for that, we need collaboration for all the key players in Mauritius, whether it is the fintech players, whether it is the banks, whether it is the merchant ecosystems, whether it is regulators, and whether it is the authorities in the country. That's all I have. I hope I haven't gone over the 5 minutes that was awarded to me. Thank you.
Kresh, thank you very much, and please forgive me for mispronouncing your surname at the start. You are, of course, Kresh Goomany. Thank you so much. We continue with sharing experience, and this time from CIM Finance, where Sudheer Prabhu is the CTO, and I'm delighted to introduce him.
Thank you, Hugh. Good morning, good evening, good afternoon to all from wherever you are. Before I embark on what we are doing with MOCAS, a bit of background about who we are and what we are doing. CIM Financial Services is a non-banking financial services company licensed under FSC. However, for the payments, we do have license from Bank of Mauritius as PSP intermediaries. Our main business involves lending, which is consumer lending, personal loans, leasing. We also do credit cards and factoring. Our main collections are repayments and disbursements of loan. That's where we exchange a lot of payments. Historically, the repayments that were done to our loans was always a cash company. We were always a cash company, which was almost about 90 to 95% that was repaid to us by cash. Long queues outside the offices every month end, people queuing up to repay back their loans. Looking at this, we embarked on a phygital strategy in 2021, wherein we introduced our consumer app, which was only a service app, which means a customer can see his balances and inquire about his balances, installment, etc. And then when we got our PSP license in 2022, that's where we introduced the payment option in our consumer app so that customers can pay us directly. Next slide, please. Yeah. So where are we using MOCAS? In order to increase the usage of MOCAS, what we did was we did a small change in our app. We introduced MOCAS as a prominent payment method in our application. If you look at the slide there, first option is only instant payment. Only when you click on others, that is when the other options get opened, which is internet banking, other transfers, etc. Which means by default, all our payments will come through MOCAS. This has helped us increase the digital payments from almost 0% to 18 to 20% in the last 12 to 18 months in terms of repayments that is done through MOCAS. 80% of our mobile app users use MOCAS at least once in a month to repay us. Of course, if there are any ad hoc payments, they do make use of it, but at least once in a month they use MOCAS through our app. The introduction of MOCAS has also brought in a lot of efficiencies in our reconciliation system because it's a direct credit to the account. Therefore, an auto reconciliation is being set by us, which auto knocks off against the central bank account that is there. It has reduced a lot of workload at our branches because it's an automated payment. There are no queues at the branches, and therefore a less number of things to be done on the front, and which has helped us increase productivity in terms of sales of credit to the front office. This also has helped us, moving to our commitment of Go Green strategy, which means we are issuing the receipts digitally to our customer as against the prior uh, printed paper receipts that we used to issue when we used to collect money from our customers. Next slide, please. Moving on, in terms of acquiring, what we are doing in terms of acquiring. We have introduced a scan and pay on our mobile app, which means even though you are not our customer, not a customer of CIM Finance, using the scan and pay app, you can use MOCAS rails to pay across any bank accounts from a bank account to a merchant or vice versa using the peer-to-peer payments that are being set up by the Bank of Mauritius. Customers can link their accounts in our app to easily scan, as I said, to using the QR code. We have also built a dynamic QR code on our traditional POS, right? So the long pause that we had, we have converted that and introduced a pause, introduced a QR codes in that to enable our customers to pay that. Initially, we have started it within our own CFSL offices for corrections. Our own corrections, we will be rolling out to all the merchants so that our existing POS can also become acquiring POS for QR codes besides the credit cards that are there as part of our acquiring strategy. Next slide, please. So what's coming next? In our innovation that we are doing in terms of digital loans that we have today, except for disbursement, we do everything digital. So our next thing that we are coming out very shortly is instant credit of loan to a customer's account when he applies through our mobile app, right from origination till the disbursement using the MOCA's rails will be introduced very shortly. We are working on it. The last leg is pending for us to roll out, which actually enhances the outbound payment for us when it comes to MOCA's payment. It reduces a lot of work for our internal staff who used to prepare a long list of disbursements that need to be done, upload into some internet banking site of the bank. It used to debit and then pay it to the customer. Now with uh, introduction of MOCAS, we'll be doing an instant disbursement to our customer. The moment he applies, we give a approval immediately, and even the disbursement happens immediately, subject to all credit checks, KYC checks being done. We will also explore additional features as and when they are available to us. We are constantly innovating using MOCAS rails because we are primarily a credit company. We want to introduce more and more uh, MOCAS rails and innovate more and more on that front. That's all I had in short on where we are using MOCAS. Thank you so much.
Thank you so much, Sudheer, for those excellent remarks. And it's now my great pleasure to introduce Mark O'Sullivan, CEO and founder of IPT Africa. Mark, over to you, sir.
Good afternoon and good afternoon, good morning, wherever you are. Thank you for listening to me today. I've got quite a few slides, but I think we can go through them fairly quickly. Just a quick start. I've been regulated since 2017 in Mauritius, one of the very first fintechs to be regulated. And I think it is great kudos both to the Bank of Mauritius and the FSC that over the past 7-8 years, they have really supported the fintech sector in Mauritius, which has allowed players like ourselves to grow and new entrants to come into the market. And even locally, Mauritius is actually a cashless society. You know, it's just crept up on us. We deal in the international market, but the partners we have now has really been down to the regulation here that's allowed us to bring them on. So kudos to the regulators. So I will start my slides, and as I go through them, if you can quickly move through them, we can explain what we do. So what do? We are a technology platform that powers payments for B2B companies looking to operate in Africa. So if you think of a global multinational that's operating in Africa, moving money into Africa and moving their profits out is quite a challenge. And the challenges are global banks provide limited African currencies. A bank in the US, a bank in Europe probably won't give you a price in Egyptian pounds. You'll need to go through a fairly difficult process to get that price. And normally you can't get that price. So what happens is they'll just send US dollars straight into Africa. If you can move the next slide, please. Liquidity. Multinationals operating in Africa obviously earn their profits in local currencies. There is a lack of liquidity in a lot of African currencies. So to repatriate profits is very, very difficult. And what that leads to is a lack of investment. You've only got to look at Nigeria. Some of the biggest corporates in the world are pulling out of Nigeria because they can't repatriate their profits. That's not a great story for Africa. Next slide, please. Banks themselves, they charge very high fees outside of Africa. You can be paying 8 to 10% for a payment. Now, if you imagine a multinational that's moving millions and millions of dollars, these are huge, huge costs to organizations. And a lot of times they just won't look to service Africa. They look for a cheaper option elsewhere, maybe Europe or Asia. If you can move to the next slide. And the challenges are Africa is a fragmented continent. It's 54 countries, 54 different regulators, 54 different banking systems. So it's very, very difficult to navigate that unless you have the technology, the expertise, and the partnerships. Next slide, please. And how payments work today. So I'm going to give you an example of how a payment will work today. So imagine you're in the US and you need to make a payment to Kenya. Go to the next slide. Your money in the US will probably be transferred to another bank in the US, an international bank. If you can move to the next slide and the next slide. That international bank will then send it to a major African bank, normally in South Africa. If you can move to the next slide, please. And then finally, it's going to get transferred to the bank in Kenya, where the client wanted it to go at the beginning. This can take 10 days. And in that 10 days, the client has no idea where their funds are. The analogy I like to give is, would you go and order a television from a store when they wouldn't tell you when they're going to deliver it, and they'd only tell you the price when they delivered it? You wouldn't. But payments globally into Africa still operate that way. There's very little visibility. If you can go to the next slide, please. How do we work? So our technology links in a multitude of African banks that allows our clients to price payments into and out of Africa from a single platform, a cloud-based platform. It's fully compliant and fully transparent. Next slide, please. It's scalable, which means a client can send one payment or up to 50,000 payments. We work with a multitude of clients who run global payroll into Africa, where they're sending 500 or 600 payments on a single file, and they're clearing into Africa within an hour. If you remember the previous example, you're looking at 10 days and no visibility. Our payments allow our clients to see the price of the payment, and it gets delivered within an hour. Next slide, please. We don't only service Africa from Mauritius, we also service emerging markets. You know, Mauritius is connected. It's in a great strategic location, so it's connected to Asia, Europe, and the Middle East. Next slide, please. And we don't only do African currencies. You know, the world is expanding, so we can do over 106 currencies throughout the world. We like to focus on emerging markets. They are difficult currencies. That's where our clients request the coverage the most. And we can actually collect funds, i.e. provide liquidity through our partnership network and banking network in 21 countries. You know, our USP is we try and clear all those currencies in the same day. Next slide, please. We're seamless, we're reliable, and we're cost effective. Next slide, please. And so why Mauritius? Like I say, I've been in Mauritius for 12 years now and I've been regulated for 7, going on 8 years. I think post-COVID, Mauritius really has become more of a strategic and significant partner for Africa. I think a couple of things really is the reason we are still here and we continue to grow here. I think legally the structure is fantastic. It gives our clients great credibility, the fact that we can default to UK law if there are any issues. As you can imagine, operating in Africa can be quite hectic, but Mauritius is a very reliable location to operate from. The regulators are certainly open to suggestions and you know, collaborations, and even locally now that the local banks are really open to collaborating with fintechs. 10 years ago, that wasn't happening. You know, Mauritius is a gateway to Africa, and we've mentioned it a couple of times from Bank of Mauritius and the FSC, the words collaboration and partnerships. And to operate in Africa, you do need both. You need to be able to collaborate and partner both with banks and other fintech providers. Next slide, please. If we go to the next slide. I think we are done, and that is it. So if you want to know more, that's our website. I know we're short for time, but thank you very much for listening to me. Thank you.
Thank you very much indeed, Mark. Okay, right in a minute. Thank you very much indeed, Mark. Much appreciated. And continuing the theme of sharing the experience, we have now got Marco Boldini, Executive Vice President of TerraPay Group. Marco, my pleasure to hand over to you.
Fantastic. Thank you. Thank you very much. Thanks for having me. I think it's a great opportunity for me as Global Head of Governmental Affairs at TerraPay, and also for TerraPay to be here today to demonstrate once again how grateful we are to the fintech ecosystem in Mauritius and to the regulators in Mauritius as well. I've heard many interesting speeches from the regulators today and from some of our peers and colleagues in other industries. And I think we all agree on one common factor. essentially the progressive regulatory framework that we have seen in Mauritius has been a very deciding factor for many fintech companies. And I suspect this also has contributed quite favorably to become one of the top spot in the fintech ecosystem. Before entering into the details of some of those aspects, I would like to just give you a couple of minutes, no more of a briefing of what TerraPay does. TerraPay is a global payment company, and we have licenses in many jurisdictions, roughly 31 jurisdictions across the world, and more than 130 regulatory approvals with partners in local jurisdictions. We started our business in 2015 and we progressed quite quickly to many different products and many different jurisdictions. Generally speaking, I would say that TerraPay is focusing predominantly, although not exclusively, on payments. But in some jurisdictions, we also have electronic money issuers licenses. I'm referring to Italy, Europe, Singapore, for example. Those are places where we have an electronic money issuer license. Next slide, please. And as I said, I think for TerraPay, next one, please. For TerraPay, the most important part is to make sure that we can connect the dots across the globe and across the various jurisdictions. Next slide. We help global companies to simplify essentially the cross-border payments journey, which can be, as we have heard earlier, very difficult for many reasons. We partner with banks, MTOs, with travel business companies, with global business companies. And of course, we are trying also to transform the mobile wallet usage with real-time payments in many geographies. At the moment, one of the main focus of TerraPay is on the interoperability of wallets and the possibility to create a more cohesive and inclusive interoperability system for our customers. Financial inclusiveness is another important point for us. It's probably one of the top priorities we have at the moment, and this is one of the reasons why I think Mauritius in that is a great place to be. Next slide, please. So here are some numbers, some regulatory approvals and licenses, some of the bank accounts and access we have, including cards, users, and tech points. The company is growing rapidly. We have now more than 800 employees and, as I said, global offices in more than 12 countries. We have more than 40 nationalities within our company, and this is becoming extremely international. We are now really a global company, and it's important to say that because essentially everything started in Mauritius. Essentially was our first important hub, and then of course with the support of Bank of Mauritius and FSC, we could grow as we are today. Next slide, please. Next, the main points that my colleagues raised today are in fact some of the points that in the Governmental Affairs Department in TerraPay we discuss very often, also with the co-founders in TerraPay. So the robust legal system in Mauritius, which as we know is a hybrid between English common law and French law, gave a lot of reassurance to investors and clients when we originally launched the license there. The high level of standards for anti-money laundering regulations enhances obviously Mauritius' credibility and reduced risks associated with financial crimes. For TerraPay, compliance, risk, and legal is something in which we don't want any kind of compromise at all. In fact, it's important to note that one of our co-founder is still the chief legal officer of the company, giving you the importance that TerraPay poses on this. Data protection and privacy laws is becoming increasingly important, especially for the interoperability aspect. And the Data Protection Act in Mauritius aligns with the best European Union standards like GDPR. So these high standards facilitates business with also European partners. The government in Mauritius has always been very active in support the fintech sector, and the innovation department within the FSC demonstrates commitment and alignment with the government. The strategic location, as some of my colleagues said, is also very important because position between Africa and Asia, Mauritius serves as a gateway for TerraPay. There is an economical and political stability and skilled workforce and infrastructure. So all these points together make very clear to TerraPay and to our competitors and peers the place that Mauritius is placing in the fintech ecosystem. And let me say on a personal note and professional note that I have been in this industry as a lawyer for 25 years now, and I have led many companies from a regulatory perspective. And very rarely I found the regulators very proactive and collaborative. One of my colleagues said before that too many regulations are not good, and I completely I agree. It's not the quantity of regulations, but it's the quality of the regulations. Too many regulations inevitably will bring to some disalignments because it will be impossible to cover those. Plus, there will be an issue of interpretation. But very focused, clear, stringent, and strict regulations will make the process of investing in Mauritius, as is happening now, easier than in many other jurisdictions. Obviously, without compromising, as Mauritius is in fact doing, the level of reliability. So in TerraPay, we are very grateful for what Mauritius gave to us, and also we are very happy that we are in a position to give back something to Mauritius in terms of data, in terms of collaboration, and in terms of new ideas and opportunities. So we like to see the regulators as our partners, as our allies, and we hope to be part of the discussions with the regulators, especially in Mauritius, for all new developments that the regulators will have in the pipeline. Thank you, everyone.
Marco, thank you very much for your extremely good exposition of TerraPay and why and how you value the regulatory regime in Mauritius. And we have one more session sharing experience of practitioners, and that is Jessica Naga, who is CEO of MINDEX Group, and my great pleasure to hand over to Jessica.
Thank you very much. So good day, everybody. It's a pleasure for me to be here. MINDEX is not a traditional payment player. We, as you can see on the first slide, if you could go back, please. On the first slide, thank you very much. You can see our licenses. We're a securities exchange. We're a virtual asset marketplace. We're a custodian, and we're a clearinghouse. But what I would like to talk to you about today is asset tokenization the future of payments? Next slide. So I'm going to refer to a report of the IMF, dated 2020, that talks about the difficulty of cross-border payments in Africa. And what it says is that it is the expense and difficulty of making payments across borders is the reason why development is so difficult. It says it is one of the reasons that among Africa's 55 countries, 15% of their total imports and exports are within that continent, whereas in Asia it is 60% and within Europe it's 70%. We have heard today many captains of industry talking about very innovative and disruptive solutions throughout the continent, and I just want to discuss with you what major players are saying about tokenization. And the first one is World Economic Forum, and it talks about the expected global GDP to be at 10% of tokenized asset and stored on blockchain by 2027. Next slide, please. That report that I've just mentioned entitled blockchain is in from the cold, and stablecoins are set to change the financial system forever. I would like to show you some figures. So the first one is about Tether, USDT, and the second one is USDC. If you look at the market cap, so I don't know if you can see there, but the market cap a year ago was at 88 billion. Today it's at 124 billion for USDT. You can see the volume of trade in the last 24 hours is twice the market cap. So the volume of trade has reached 247 billion. The market cap was at 124. This is very, very unusual, and it shows you the level of trading that's happening. And you can see on the other side USDC, which is also very high, 36 billion market cap and 20 billion volume of trade in the last 24 hours. What I'm saying is we definitely need to be looking at this because the volume is just increasing exponentially at the moment. You can see the last end of the graph, which shows you it's going pretty much straight up. Next slide, please. This is McKinsey. McKinsey predicts that by 2030, the volume of tokenized asset could range between 1 trillion to 4 trillion. That's a 2024 report. And then Standard Chartered, in another report, highlights the transformative potential of tokenization, projecting a 30 million market for tokenized real-world asset by 2034. What is very relevant here for Standard Chartered is that this year they jumped in both feet into the sector. So they announced very recently, a month ago, a digital custodian license in the UAE, and that they partnered with a broker-dealer from the UK called TPI Cap, and merging their capabilities to give easier access to a wider range of people. So the very traditional players are now getting into the space. Next slide, please. That's a Bank for International Settlements report of 2020, which says experiments have demonstrated that tokenized settlements could support efficiency and safety through programmable central bank digital currencies. These are proper experiments. The report sets out very clearly what they looked at, and the conclusion was very clear. And then the European Central Bank, a 2022 report, says that tokenization and DLT, distributed ledger technology, could simplify settlement processes, eliminate intermediaries, and accelerate post-trade services, especially in markets with low liquidity. So that, for me, applies very much for our markets in Africa. Next slide, please. So I would like to look at, very simply, the benefits of tokenization in the payment space. Next slide, please. So first one, increased liquidity. For me, that is possibly the most important advantage that would be relevant in the future. How near that future is, we don't know yet. But I don't think it is that far, given how quickly, for example, the stablecoin market is changing. So tokenization can make high-value assets like real estate, artwork, commodities more liquid by dividing them into fractional shares. This creates new opportunities for payments and transactions by enabling people to exchange parts of traditionally illiquid assets. These fractional tokens can be exchanged directly, often much faster than traditional asset sales, increasing transaction volume and flexibility in payments. The second one, reduce transaction cost. So when you represent assets as tokens on blockchain, intermediaries like banks and brokers, when they're not adding value, can be eliminated. This reduces the cost of payments associated with transferring ownership of assets, cut down on fees and overheads. The third one, faster settlement. So tokenized assets operate on blockchain networks, which enable near instant settlement. And programmable payments and smart contracts. So this is a very interesting one. So tokenized assets often utilize smart contracts, allowing for automated payment flows. Very complicated payment flows can be automated. So for instance, if we take an example of a rental income from a tokenized real estate property, this could be distributed automatically to all token holders. It completely disrupts traditional payment processing in revenue distribution. cross-border transactions. So tokenization enables borderless transactions. So within jurisdictions, it can be enabled very efficiently with a central bank system like we've discussed today. But when you're going cross-border, tokenization can make a real difference. Enhance security and transparency. Next slide, please. Thank you very much. And that are the advantages of blockchain, right? Highly secure and transparent. Payments made utilizing tokenized assets are visible and verifiable on a public ledger, minimizing fraud risks and increasing trust. This is especially valuable for high-stake assets, which traditionally require extensive documentation and verification in payments. 24/7 market access, that is self-explanatory. And then we have finally the interoperability between digital assets and fiat currencies. So tokenized assets often exist on blockchain platforms that can integrate with digital currencies like stablecoin, and that would make them atomic swaps possible, so you're exchanging them instantly one for another. But increasingly, there are possibilities of integrating with fiat gateways, be it card, be it mobile payments. For example, we're one of the 20 billers on Blink. So these integrations become much easier. So this interoperability makes seamless movement between different types of digital assets and fiat, facilitating flexible payment options and reducing the need for traditional currency exchanges. So to conclude, I would say, next slide, please. One more. This is the MINDEX ecosystem. We are fully regulated by the FSC, and I will echo what Marco said earlier. It is not easy to get licenses in Mauritius, but the licenses are valuable. The regulators are listened to, you can discuss and negotiate with them. As a lawyer with 21 years core, I've been a regulatory lawyer for a while, and I've worked in many jurisdictions, and I found Mauritius to be easier when you're dealing with a very innovative space because the regulators interacted with us and helped us probably create better solutions. So we chose to be licensed in Mauritius because the legal and regulatory framework allowed us to create this complete ecosystem, to create, store, and trade assets of any kind, securities or non-securities. So what we have is one roof, all types of assets, open to all types of investors, retail or not retail. We say best quality assets because we work with the best players internationally, and non-stop efficiency. What this is a crypto exchange with the regulation around it, allowing more security for stakeholders. We are also now, by partnering with regulators players on the ground in Africa, able to take 18 African currencies on the ground and convert into stable coins to be offered afterwards or swapped for crypto or tokenized real world asset instantly and very, very efficiently. So this is a little overview of MINDEX. Thank you very much.
Jessica, thank you so much. Well, as you've heard, there have been a whole series of ringing endorsements of the international financial centre that is Mauritius and the regulatory regime within which it operates. I think those are all very powerful. We're a little bit pushed for time on questions, but I have some questions and I'll perhaps try and fit in at least a couple. This is probably one for the FSC, asked by Rajiv Pazal, who says, given that clients are internationally located and doing transactions using credit cards, can you advise how we usually conduct the verification of source of funds in these cases? Also, re the due diligence on the clients, do we need to request full set of KYC, passport, proof of address, bank reference, and CV, etc.? Maybe someone in the FSC can pick this one up.
Thank you. For the KYC, as our friend from Bank of Mauritius said, we are soon to introduce centralized KYC. Centralized KYC will be starting for the GB sector, so this will facilitate the the KYC validation thing. On the credit card, sorry, I could not understand the question. What was it? Can you please repeat?
So the question related to if people are using credit cards internationally doing transactions, how should practitioners conduct the verification of the source of funds in those cases, and then relating it to the due diligence on the clients themselves?
I can only venture a guess here because probably it's the responsibility of the issuing bank of the card, which would also do verification of the transaction, but I'm not very sure. I'll come back on this. Thank you.
Thank you. And very sadly, we have now run out of time. I'm so sorry about that. My thanks to all the presenters for a truly outstanding session and a very wide range of information and views, which are of huge value. And I also thank our audience, wherever they may be in the world. We've got well over 100 participants, and that is an absolutely fantastic turnout. We have a couple of upcoming events in the FS Club. On Friday, the 15th of November, Digital Empires. On Thursday, the 21st of November, Age Proof, the New Science of Living Longer, Healthier and Wealthier Life. So it only remains for me to wish everyone a good rest of the day, evening or night, wherever you may be in the world. Thank you all for presenting. Thank you all for attending. My thanks to everyone.